Well, let's get back to the broader markets. As February begins, the S&P 500 is up 6% for the year. Bitcoin up close to 40%. Meanwhile, the yield on the 10-year is down about 10%, if you want to calculate it that way. So clearly a refreshing of animal spirits here. Joining us now with a look at the market technicals, Katie Stockton, founder and managing partner at Fairlead Strategies, as well as a CNBC contributor. Katie, good morning.
Good morning.
So here we are on a Fed day where the market again kind of gets up to a point where it's got some decisions to make. In other words, whether this rebound rally really started back in October has further momentum behind it, can really break out of that downtrend, or if this is as far as it goes. What's your technical work telling you at this point?
It's definitely a pivotal week for the market in technical terms. We have the rally from January now lifting the S&P 500 into resistance. You speak about the downtrend line. What I use is called the cloud model, and the cloud model shows resistance for this week of roughly 40.50. S&P 500 is currently above that level. So if we see a weekly close, so this Friday, a close above 40.50, that would mark a short-term breakout per this cloud model, and that would be an incremental positive. It wouldn't necessarily mean that the downtrend has fully reversed. In fact, we'd need a bigger move for that. We also would expect that kind of bullish reversal that would be lasting in nature to be preceded by more improvement in our long-term indicators. We just don't have it yet in terms of the monthly gauges that we track, things like the monthly MACD. Those haven't turned to such a degree to suggest that that October low was the final low of this bear market cycle.
Yeah, certainly still more to be proved if it's going to go that way. Katie, I wonder how the NASDAQ, or at least the mega cap growth part of the market, looks right now. Clearly, leader on the way up, leader on the way down. It's been really a weight on the indexes, but you've gotten some relief, and we're getting some of the the fundamental flow with earnings this week as well.
Well, yeah, that relief has led to upside leadership from these mega caps during January, and it is a welcome bounce. I think overbought conditions have returned for really all of the mega caps. Meta, for one, is right up against its downtrending 200-day moving average. So there are resistance levels in line. There are also downtrends still very much intact there. So while we don't have any decisive sell signals coming into these earnings reports, I think when you see the overbought reading ahead of them, it does make it harder, essentially, for them to see upside follow through. So they're somewhat challenged here coming into resistance. The leadership has been quite good. That's affected market sentiment. It's affected sentiment in a way that is actually not constructive from a contrarian perspective. We still watch the volatility index, or VIX, as an indication of transactional sentiment, and it's very depressed, showing some complacency. So we worry a little bit about that, especially in an environment that has an overbought breadth reading. Breadth has been widely noted as being very strong. This is true, even if the mega caps exhibited leadership. And yet those measures are quite overbought and haven't reversed course fully, in our opinion. So we're a little bit nervous about the reactions here. We'll watch and wait, not willing to step in front of them. But we do think there's something to prove from the market right now. Just in January, this is as of really yesterday's close with the January monthly data, we did see something interesting, though, that's brand new, and it's a DeMark signal, so one of these counter trend indicators that we track in 10-year Treasury yields. So that's something that would suggest that this year is indeed an inflection year. So we obviously don't think necessarily that we have that inflection already, and yet I think that would be one indication that yields should actually be more range-bound for several months. And that's a shift in our work. Long-term momentum is still to the upside there, but should start to neutralize here based on that signal.